Hey everybody, welcome back. We're exploding a little bit after hours here, aren't we? And that's based upon the meta news where the stock is up dramatically. We're going to talk about why it's up. We're going to talk about DPST and the implosion that we're seeing there. I think that's really important for people to understand how this is imploding and the after effects of this. Also, how to trade it. We had a real nice live trade there today. I'm going to walk you through that as well. NQ after hours. We're going to mark this off here and show you what that mark represents in a moment here. RTY actually reversed today. We're going to talk about the time that RTY reversed and why you should be paying attention to the time that it reversed. It's really important. And I really think we should spend a little time going on like why Apple's down, what's actually happening there, how you could have forecasted this a little bit. And there's some other things I want to go over as well, some live trades. So we're just going to jump right into it. We have to look at, there's two other things I want to go over. I was looking at this earlier. I want to go over risk on, risk off. There's a methodology that I use when I look at the market, and it basically takes in all these other indicators, and then you overlay those indicators, and then it comes up with another like major overlay of the entire market. I'll show you in a couple minutes here. But first and foremost, let's just start here. Apple, it was not a bad quarter. So we might as well start because it's in front of us, and we're going to be going through a lot of different topics tonight. I'm going to want your opinion on some things I'm going to show you. I want to show you a trading account. I want your opinion if you want to see this kind of stuff, and then how you want it explained so that you guys can learn to do this stuff yourself. And it's going to come back to the stool and fundamental analysis. So you can see right here and what we did after hours. This is really very little to do here. Let's just click right on what? Well, we watch these things trade up from the movement when it's announced, right at the 430, and we always drop an anchored VWAP. We can see the attempt, we can see the denial, and then we can see the absolute just utter chaos and breakdown after hours, and we're sitting right on that support line. So we know what we're dealing with right here, right? We know we're trapped. It just was not a great call. This, eyesight Vision Pro thing that everyone's supposed to be all giddy about. It's just a dumpster fire. Nobody really wants it. Even the corporations are not going to go out there and make anything for it. Like, I think it was Spotify came out and said they're not going to do anything for it. So you need to hold 80.70. If you don't hold that 180.70, you're going to have some issues. You see that level right there. Now, you might remember how that level started forming. That level started forming here because of the 200. Well, this is telling you you're going to gap below the 200. So if we just look at a bear chart, meaning that there's nothing on it, it's just completely bare, then you're going to put yourself in a position where you need to hold that level. And if you don't hold that level, you're going to have a problem. I do want to just get to this because I'm thinking about it before we start getting into the earnings and what's going on with DPST, that we should really focus on this. If you take a look at the S&P, and you see how we're getting up here and we're pushing, and then we're coming back down and we're pushing, and they're rotating us, right? You see the push, see the line, the push, and you're seeing it everywhere, right? The push, and then we can't get back over. All right, so let's just go to here for a second and take a look at the NQ. And then if we change this to line form, and then we just do the simplest of things of take ES and put ES in there, and then let's just take, let's do it RTY so that we keep it all futures for a minute here, right? And this one looks like it's already set up, but I'd rather use this one. All right. And then all we're going to do is just click on a 1 minute chart, and anybody can do this at any time. And you're going to see that 1130 level. Now, I just want to go to here and just show you, did we ever, from 11:30 to 4 o'clock, did we ever come back? And the answer is no, you never did. And why is that? Well, you had the 4 to 8 week bond auction sitting here. So if we go to our trusty chart, and some people have emailed me about how I could start sharing some of these charts, and that's really what I want from you tonight when you're watching these videos. I want to know what's the best way to present data. That's really what, when you see what I'm about to show you later in this video, I want to know what you think is the best way for me to show data so that you can look at how to do these trades. Is it the live trades? Is it showing this account that I'm going to show? And I want to explain the account in some detail. But what do we see here? What happened to TNX? What happened around that 11:15 level? What time was the bond auction? 11:30. So obviously you can see what happened and how the markets reacted to it, right? Look at what happened with the dollar around that time. It's not rocket science, guys. I mean, it's constant that this stuff happens, okay? So in other words, the 10-year rallied, or the yield rallied. Everyone's going to say, well, yield rallied. Yeah, yield usually drops, but it got crushed yesterday. So maybe we didn't get as crushed as we thought we were going to get today. And because of that, you got a relief rally in the dollar, right? Or the dollar sold down and the equity market went up, right? Everything's relative, and we have to look at it from a relative basis. And I can't stress that enough. Everything is relative, and we must look at it from a relative basis. I would prefer to move in absolute terms because it's easier to explain, but we just have to realize that sometimes it's just not going to be that easy. Things are not always going to be as simple as we want them to be. But you need to start watching the bond market. Now, tomorrow, another data point that you're going to have to watch, and if you tune in, you already know this, 8:30, we will be live pre-market, as we always are. And the purpose of me telling you that is because you might want to be there because we're going to have non-farm payrolls. And we saw what happened with ADP. But again, I want to talk about the 10-year and how you're rolling. You got right to what I refer to as a control bar. And it's really important that you understand where you are in the pecking order. What do I mean by that? Is macro in charge? Is fundamental in charge? And what we're going to do tonight is we're going to see a couple spots where macro's in charge and fundamentals in charge. Like we showed yesterday. You'll remember when we talked yesterday about very clearly when we talked about, hey, when he comes out and says something like, oh, I don't think we're going to raise rates, what an issue it is, right? It becomes an issue. So right now, what that means is, and just understand this, you're going to be leaning on the macro now. We're going to be leaning more on the macro into March than we were leaning before. It became very clear that he was going to cut rates in March. And now I'll rephrase that. We thought it was very clear that he was going to cut rates. Don't know why that popped up, but it became very clear that he was going to cut rates. Now we're back to data analysis where we're all economists all over again. So here we go. And that's definitely something that we're going to have to pay attention to. So fundamentally, we're going to talk about Meta, why it moved the way that it did, why to understand this and how you can utilize this and do those kinds of trades yourself. But technically, if we lie over and just look at the simplest of indicators, I use a 12, a 22, and a 55. You should use what you're comfortable with, but you can clearly see that the 55 is being respected. And then if you just put the 200 in, what do you see? We see what we refer to as a death cross. And we'll just go right here, clean that up, and we'll clean off the 22. And you're getting a death cross, which tells you what? Yield is dropping. Okay, so how do you benefit from that? Well, two ways. We've been talking about this fund forever and a day. We started buying this back in November. I get asked a lot about the community. Do you just day trade? About 25% is day trading, 25 to 35%. It's just more active, so we talk about it more. But these weren't even swing trades. These were just long-term trades that we put on because we understood what? The stall. We understood macro analysis. We understood what Powell was saying here, and that was it for rates. So we bought HYG there, and we bought TLT here as well. And again, what happened? We got to the 55, we got to the 200 here, and we flipped. Is this the spot to buy it? I don't know. I don't know where your edge is right here because now you're back in the battle, aren't you? Does he cut? Does he not cut in March? Goldman moved it. They kicked it down the can. They were saying March forever. Now they have 5 rate cuts starting in May. 5 seems pretty darn aggressive unless something happens, but maybe something's going to happen. And right now, I do feel that we're a little frothy. Here, take a look at this risk on. Now in front of us is a risk on, risk off indicator. And you're going to see a line right here, which is going to show you the risk on, risk off. You obviously can't go over 100, and you obviously can't break 0. So anything that's extreme past 50 is what we want to look at. So what is considered extreme? Well, anything over 90 is considered extreme. And so that's where we're going to start. Let's get rid of that line and let's put this line right here just so you can see. Now, we're going to take everything on this side and here. We're going to get rid of it. And we know why we're going to get rid of it. Because why? The Fed injected $1.7 trillion in the market. So all this data is extremely skewed. We don't have that backdrop right now. We have an actual stock market in front of us, a market of stocks, which is really kind of nice, actually. But we're currently at that 90 level. Now, what is this telling us? This is telling us our indicator showing risk on or risk off. And then what happens when we see that? And I think that that's an important distinction. So are things so oscillators, indicators, are they so bullish that we need to take pause? And these are the kinds of indicators that I like because they're contrarian indicators. But here, let me show you a snapshot of what they are. So this is risk on, risk off indicator. And this shows the components. And so you can see for yourself what they are, whether they're taking the summation, McClellan, net highs, stocks and correlation, bear market, total put call volume, AAI bull ratio, fear greed, stock bond ratio, excessive optimism, up volume. I really like how they're doing it. They're obviously not going to show you their calculation, but I would think that it's probably pretty close to an equal weighting. And what they want you to understand with all this is that if 90% of them are firing in all cylinders, it might be something for us to pay attention to. Now, I want to be really clear about this, and I apologize that this one's not very clear as far as the screenshot that I took. I'm not really sure why it's not as clear as the other ones, but it's not. So what we're going to notice here is when this indicator is above 90%, annualized return is 0.1%, 14% of the time. Well, that's not a lot. And I put this in here so that we can all talk about this. So what is this pointing to? Well, we're going to talk about what this means because this is only going to happen when? When are all these indicators going to be firing? right? It's only going to happen at a couple times. It's going to happen when what? You're going up. These indicators are not going to fire if you're going down, right? You're not going to have risk on indicators firing if you're going down. It just makes sense. What we're looking for here is not to say, oh, are we going to wind up coming back and it's going to be vicious? Quite the contrary. What you're going to see here is, are we getting exhausted? And when things are so good, it starts to get some level of exhaustion. And there's other indicators that I use to determine that I can go over, but I think it's important to understand why we're looking at this. So they have gone back through history, and they went back about 50 years, I think, in the data. And what they're saying is, except for 2002, whenever risk on indicator registers a rating of 90% or higher, it's consistently signaled a bullish backdrop for the S&P. I want to be clear about that. It's a bullish backdrop for the S&P. However, almost near agreement, meaning when everybody's agreeing and we're just going to rip, you're going to see some near-term exhaustion. And that's kind of how I think we're getting. Notice how the market's getting a little narrower, how we're all focused on like 3 or 4 names right now. We're all talking about SMCI, NVIDIA, ASML, and which is great. They crushed, and they probably are going to continue to push over time, right? But what are we saying here? We're saying that you might be a little exhausted in the short term, especially over the following week when this hits. Okay, so I want to be really clear about that. We're just looking at a very short period of time, the following week, and that data, the data does support this when you go back and take a look at it. Any digestion of the rapid ascent from last fall will most likely represent a pause. Any digestion from the last fall will most likely represent a pause. Why I want people to get this and why I'm spending time on this, because I always get asked, what is the purpose? Right? Well, not always, but people do ask in the comments. And I appreciate that because it lets me know, like, hey, get to the point. Or hey, please tell me your point. So if we pull back, and we're going to pull back eventually, that those pullbacks, are what they're saying is they're buying opportunities, with the world's most benchmark index showing a 90% win rate 6 months from that pullback. So when we see the pullback, there's a 90% chance 6 months later you're higher. That's why this is important. When you see the pullback, based upon this indicator firing, they're saying there is a 90% chance that you are higher in 6 months. So when this happens, we really shouldn't be preparing for Armageddon according to this data point. Please understand this is one data point, but I find data points like this fascinating. Anything contrarian or that shows exhaustion, I find fascinating because it can show a change in trend. And if you can get and follow a change in trend sooner, that's why sometimes I tend to use DeMark and their exhaustion levels. Not so much to act, but just to be cognizant of what's going on. And so they do all the research and they come back, and I'm paraphrasing, but every indicator on the composite reflects a shift of risk on status. Market conditions are in solid shape. Fairly common trait. Right, of course they're going to fire. We're in an uptrend. When breadth and sentiment are near agreement like now, we can sometimes lead to a pause or a buyer strike. After similar readings, what's interesting about this too, we just went through a period where we were just looking at smart money, dumb money, and we were saying, look at how they're in agreement. Look at how they're in alignment. Look how rare this is. And that's somewhat reflective in this risk on, risk off indicator where all these other oscillators and indicators are firing on the same levels. Hopefully you can see how this all ties together. The S&P was 89% higher in 6 months. So any interruption in momentum is likely to represent a customary consolidation phase. Pull back 6 months later. That's what the data suggests. Comment below. I'm sure you guys will have comments. So by showing the risk on, what I want you guys to understand is this. I don't think that we're in a position here where the market is going to just implode. I don't think that. That's not what I'm saying. To me, it just seems like everything's firing and that's great, but our buyer's getting a little exhausted. Now, after what we saw tonight with Meta, I'm not so sure that they're going to be that way. I'm not so sure after Amazon that they're going to be exhausted. The number one thing that is concerning me is DPST and this move. But before we get to that, why is DPST down? This is the 3X Bull ETF. NYCB actually is down, and it's because they cut their dividend. From what I can gather and going through all their data and all their research reports going back for decades, and this goes back a long, long time if you go through all of this, right? I can't find another quarter, and I started clicking on these randomly, where they lost any money ever. I've never found a losing quarter. So I didn't click on all of them, obviously, and I'm not going to do a full analysis on it, but I could not find one. And so they just took that loss. And this is what should bother everybody about NYCB. And this is something, again, in these pre-market lives, you might want to watch them even if you can't attend them, because I said this yesterday where people aren't getting this. We were actually shorting this yesterday pre-market on the public live call. And the reason I'm bringing this up is even if you can't attend them, you might want to watch them, and you can always put me on double speed till you see something that is of interest. Anyway, now you're here. Look, you're undercutting. You're really undercutting what happened a year ago. Remember, NYCB was the one that bailed out or bought the assets of another bank under the guise of the FDIC. And it looks like those assets were just absolute trash. So here we are, and that's come home to roost. And that's certainly not what anybody was expecting from this regional bank. But, it wasn't just this one. I believe there was another one, Valley National Bank. Wasn't that it? VLY? I believe that's the symbol of it. And no one was talking about this one when it happened, because it was like, oh, it's no big deal, right? They missed by half. But look at this bank and look at how this setting up. Like that's pretty nasty and needs to hang in here. Now, are we going to lose another bank? Or are we going to have another banking crisis? Is that going to exacerbate or speed up Powell cutting rates? I don't know. It sure as heck didn't affect him here before. But here's where I think it's different, right? You have to love when people say this time it's different. But believe me, I know. But here's where I'm going with it. And this is where I think it's pertinent. They were the ones that bought assets. Every CEO knows this, that these were the guys that bought assets. NYCB and FCNCA. So then that means that the assets that they bought, who the heck's going to buy them? And then who the heck's going to buy anyone else's assets right now? I mean, and not without assurances from taxpayers and the government and everybody else. So this could just be, in my opinion, a real hornet's nest. If you take a look at DPST, what you're going to see here is very clear. And this was something that we talked about yesterday, shorting. A bunch of people in the community actually shorted it yesterday, did quite well with it. But today was just a great day to do it because everybody caught on to it, right? And so the goal with these is you always want to be ahead of it, which we were with the NYCB and which we were with DPST, but everybody caught on with it. And so what we did was we shorted it. We were actually able to capture this, a very huge part of this move, the whole way down. Here, watch the trade.
Number one thing that I'm thinking about is DPST. DPST just imploded. So you're really not even getting a shot there. All right, so reality's starting to set in here a little bit. So DPST, getting a little bit of reality. But I want these 80s for $4 or 50 the Fed nights. I'll buy her into that. All right, so DPST, if it gets over there, I'll probably close half those puts and then just trade around them. The puts that I bought were the 80s. On DPS. I think that could be a monster trade, actually. You can short stock too, but swipes that open. I did add to the NYCB short, up on the NYCB, up on the DPST short, up on the puts in DPST. So I think that's just the easiest trade right now. If you don't want to short, just avoid them. It's always the case. Always should have shorted more when you could, right? Well, you're going to give me a hammer. Maybe I'll close some. Straight down's not a pattern. You're going to bounce. I mean, I don't know who would buy any regional bank here. I just don't say it, but I guess they could. Maybe they'll see value in one of them. Sold some T options at 6.5. All right. So we already see that it's following this pattern, right? Look how NYCB, see that pattern? Watch what DPST is doing. So these are going to be some thin options, guys. So you're probably going to want to get out when you can. What I'm doing out there again is I'm just putting options out there, right on the ask, or like 10 cents above the ask. So if he panics, he'll just grab mine. So you don't have to worry about DPST unless NYCB bounces. And if it bounces, then you're going to want to go from there. I'm just putting offers out there for them to get. Oh, you took more. Took the 640s. All right. Got out of some at 640. Where should we put some more? Put some out at 7, just in case. Got throw some out there at 7. Give me that 7 print. Oh, those options exploded, didn't they? There it is. Boom. All right. Out of some of those at 7, you might want to move the stop up till 50% or something. So let's put some out there at 820. If I bounce here, I'm going to close some of the DPST puts at the market, and I'm going to close some stock at the market too. So I'm watching. I'm going to have to close stock. I haven't closed any stock yet. You can't even hold. Now, the problem here too is you got to realize at some point if this goes into free fall, and I know you see 9% is free fall, you're holding my level. Trimmed DPST 740, paid 450, trimmed more of them. You going to roll here? I don't know that you're going to roll. Trim stock, already closed some calls. You're not going to hold. Say this bar is not even 50%. That's not even to the chances of that holding if you can't even make 50%. So let's just watch. Out of some at 820, puts them out there at 9. See, so what I'm doing is these are super thin options. So the option market maker's skittish, right? So that what I'm doing is I'm giving him leeway so he can see my options out there. And if he wants them, he can grab them. If he panics and realizes he's out of position, he can just buy, right? And so he'll sweep all the orders. I hope that makes sense. Out at 9. Up 100%. Stop on the left is probably 7 as of now. I'll put some out there at 10. I don't want to be chasing this thing on the bounce. We all know it's going to bounce, right? We just don't know when. So you might even bounce here. I think I'm up $8 on the stock. I'm more focused on the options because they're so thin all day. Is it? Out of 10, put some more out there. All right. party might be coming to an end soon. NYCB is going to lead. It's going to lead DPST. We're at 11 yet. Puts them out there at 11, but I don't think I'm going to get it. I think that party's coming to an end. Put it out there at 11 just in case. I'm going to move the DPST now. 100% is my stop. Sold some at 10, up 10 on the stock, trim stock. Got out around 9.5. That looks like a bottoms for me. What do you have for me? All right. Where are we here? I'm not riding this past that. I mean, it's a matter of time before I get run over. Everybody knows that, right? So you got to cut it out as it's dropping. All right. So that is a pretty clear hammer bar, right? I mean, that's the definition of a dragonfly right there. Out of the puts, up one. Thank you very much. About to ready to get out of the stock in a moment. 100% out of the puts here. Still have stock. They could very well just come right back up and roll down, but I'm up so much, I really don't want to play with it. I'll be clear here. I'm not saying it's over, but I'm just telling you, I'm 100% out of the puts here. I don't want to be playing with this on spikes with that like a $3 spread. Like at one point, the spread was $2.50. I still have stock. I'm up 100% and on a pretty decent sized trade in a half hour. I already trimmed stock, so I'm just letting it play out. I mean, it could be a zero. Like the stock could literally be a zero. Who are they going to sell their assets to? That's the whole thing I don't think people are getting. Like, who's going to buy their assets? They bought assets they should not have bought, that were not what they thought they were. That's very clear. So who else is going to buy those? That's why I'm surprised no one's talking about that aspect of it. There were two banks that were allowed to buy assets a year ago, two regionals, FCN, CA, right? They were one of them, okay? And NYCB, they were the two banks. I don't think people get it, like how bad this is. It's just an opinion, but I don't think people truly understand how bad this can get.
So I want you to remember me showing you that live trade, and I want you to comment below if you like seeing that. I want to show you some other things that we did after hours, and I want you to be aware of them with the meta trade, and then you tell me in comments which way you would rather see data, because that helps me understand the best way to present it. So please keep that in mind with what we're about to go through. So if we take a look at Amazon came out with Rufus. Rufus is going to help me buy more stuff at Amazon. I guess it's AI, just what we needed. I'm always suspect when somebody's going to come out and show me something new that I need. It's going to help me buy more stuff, especially when you're doing that before earnings. But nonetheless, my suspicions were kind of like deflated when I saw this. I mean, they crushed. It's really hard to not like this quarter. Now, what I would say about this is obviously you're rocking and rolling after hours. And I think that the AWS stuff is the reason why you're seeing NVIDIA actually push after hours. Now you're at that 640 level, and SMCI just, someone tell them that the market's closed. You're already at 600. So you're already seeing a huge move there. At the end of the day, what does all this mean? I would really be focused on Amazon on dips. Apple's going to have a hard time tomorrow at that level, but you want to watch that. That's a 200-day moving average. That's not a small number. But I really want to get into Meta and why Meta is so important. I'm going to take off these fib levels for a second, and I want to talk about this. And I want to show you the trade, and then we'll go from there. So for me, the most important thing about this is just the way that it's acting. You can't even pull back. Now, I traded this several different times tonight. The first time, so these are just notes from tonight, and I just want to walk you through this so you can see the timestamps, and then I want to show you something else. But I'm reading the quarter, let's get that pointer. So I'm reading the quarter, and the quarter's coming in great. But the AWS was middle of the road, but the net was through the roof on Amazon. All right, so when I looked at Amazon, I was like, okay, that's okay. Meta was moving, couldn't figure it out. It was around 403, 404, and then they came out and said dividend, and this is just me typing super fast. And that's just saying I have a large position, and I misspelled position, and that's what's edited there. And then I said I'm going live. Now, on that live call, what I did in the room was just tell them immediately, like, look, and this is what I'm going to explain to you, and then I'm going to show you the trade. And what I did here was look at this and go, okay, look, this was the move on a 1-minute chart. If they're going to issue a dividend, there's two things that are going to happen. And this goes right back to the stool, okay? And I want to be really clear about that. This is fundamental analysis, like 101. What it means is this. If you understand anything about fundamental analysis, you understand that you have assets and liabilities, right? And cash flow, right? You understand that. Hopefully you understand that. If you don't, comment below and maybe we should do a video on it. But if I'm going to issue a dividend, that means now I have new shareholders. Those new shareholders that come in, they want the dividend. They don't care about that I want the metaverse and I want to be a giraffe in the metaverse. Okay, those days are over. Dividends are key now. This opens it up for people that own value funds to start buying the stock because now it has a dividend. It's not just retail that will buy the name. It's institutions that say, now I get access to the capital. Okay, one of the reasons that Buffett bought Apple was the dividend and the buybacks. If Meta starts doing the same exact thing, I'm not saying Buffett's going to do it, but you're going to get that value guy that's going to come in here and go, I want that cash flow. And there's a lot of cash here, a lot when you're doing 40 billion a quarter. And you just say, yep, we're just going to be a cash cow now. It's very similar to what Microsoft Office did. So in here, what I'm doing in here is I'm buying a very large position. I'm starting with a very large position and I'm selling it almost immediately into a push here. So you can see right in here, my cost on here was like up here, cost 408, trimmed 20%, 440. And then I'm just talking about what I'm doing, and then trimmed 50% after hours. I waited to record this because I've been very active, and I'm going to attempt to hold the rest of it overnight. And I have my criteria for that. Right now, I'll just tell you at the time of recording this, it looks like I'm going to be holding this overnight. All right. So what I do is I fire into this with a very large position. And then after that, when it spikes, I sell right into it. I don't wait for it to pull back because the position is fairly decent per the account size. So I'm not really big on doing this. So I'm going to ask for your help. I'm going to ask your opinion. Do you want to see like actual P&Ls on the day? I see people do this all the time. I don't know if this is helpful or not, but I keep an account for our room. I have several different trading accounts based upon how I trade. If it's a long-term, special situations, it's just the way that I've been trading over the past 20 years. It works for me. But in the room, I have like a quarter where what I do is there are trades that I'm doing in the room, and then I watch how those trades work, and I go from there, right? And then I might overweight or underweight them. But this account is what I would refer to as a aggressive account. So I want to be real clear about that before I even begin with this stuff. This is not how I would trade my entire net worth. This is how I would trade an aggressive account. So I want to be very clear about that before I begin. And this is not how I would trade every account that I have, nor how I would suggest anyone trade their net worth. Everybody has to make their own decisions. But I want to preface that. So if you find value in this, please comment below. The reason I'm showing this is so you can understand where this comes from. So these are positions I have on it, right? And some that I closed, some I had open. So when you see the DPST, a portion of that kind of trade I actually put in here today. Where is it? So that's like right in here somewhere. There it is. I made like 3,500 off of that. And I really like that trade. I did well with that. I actually did well in another account with it as well. But I really like that trade a lot. And what I did there was all we were doing was just scaling out as we could, pulling money out of it. This shows like year to date up there and everything. I don't know that I really care if that's in there or not, but more care about just looking at the day. Because this, obviously they can always change. And just understanding how this actually equates to money. So if you're looking here at like Meta, and this is really what I want to show, I took a huge position, I think it was like 1,500 shares, right into it, boom, right when I saw that this was a dividend. The reason for showing this is you got to understand, I've been doing this a long time. So I understand when that says like, hey, we're done being growth, we're going to a dividend company. That means you're going to get a whole new net of buyers. I'm selling that into the positive slippage into it. People say, well, you could have held it. I could have. They also could have said something stupid on the call and it could have dropped precipitously. I lock it in. And if you're interested in this, I really mean it. Please comment below, because what I did after I locked this in is I add a secondary position. And if you're interested in this and seeing these kinds of P&Ls, let me know and I'll show it. But the purpose of this is the secondary position where I actually trim some at 440. I put the 440 back, and that's actually what started adding even more value to this account, right? And so when I'm putting these things in the observations and trading it, I'm actually doing it in this account. And this account was up 28 today. So, but then you can even see like the other trades, like, okay, just like the little guys, but you can see where we're going with this. We're like the NYCB, the SMCI was just whacking around, pulling money out. Sting, because of what happened there, we go over those trades. And ZIM, I actually was long and lost money on. But if this is helpful for you to actually see the P&L, I've gotten comments like, hey, please show a P&L and how this actually plays out. But I just want to be really clear, this is not how I would, trade your entire net worth. So do with that what you will. Comment below and let me know if that's helpful. The question is, what do you do now? With something like Meta, I don't see any reason why this doesn't push tomorrow. I don't see any reason why people don't start being hyper aggressive in getting involved with this kind of trade tomorrow. I would imagine that you're going to see value investors get very involved with this. I would imagine overnight, you're going to see people get involved with this and really step into this tomorrow. So I think that, into the close, you're going to wind up seeing this thing push, and I would pay attention to it. I would not sleep on this. I don't know if it's going to drive up the SMCI or we're going to see those drive up as well. But please remember, if you own anything by the time of watching this, hopefully you'll know this before tomorrow. Please remember, you have non-farm payrolls at 8:30. and we'll go from there. So on what you saw tonight, please comment. It would help me greatly in developing future content. And we can also go over it pre-market live and kind of go from there and talk about it as well so that we're all on the same page. I do want to talk about race. You really look at this company, Ferrari, and at Hamilton. This is a really tough one to trade because of the way it bounces around. You have to get it when it has the pullbacks. But I do want to talk about this because, I keep hearing recession. And there's two things that we have to take away from this. Number one, if we were in jeopardy on growth in an election year, he would already be cutting rates. He does not see any reason to cut rates. I don't agree with them because I see what's going on at the banks. But number two, you're not hitting all-time highs on Ferraris, and they're not backlogged for 2 years if there's a problem in the world. And I think that that's where we have to start understanding, they're not just going to cut rates because we want them to cut rates. They're only going to cut rates to spur growth. And we're not seeing the need for that yet. Now, maybe they're going to kick the can down the line. I don't know. But when you start seeing companies like Ferrari hitting all-time highs, I think that's something that we have to pay attention to. That's it.